We are only down, believe it or not, only 7,000 barrels of oil per day. We are still exporting most of our crude. So I've been very surprised. The exports are continuing. We had firm transportation to the Gulf Coast. And so everything's being taken offshore, pretty much.
So who's doing the cutting then? Is it the bigger players, the Exxons, the Chevrons? We know their capital spending has gone down on average about 30%. But and rig counts are falling to an all-time low since they've been tracked, I believe. But who's really doing all the cuts then? Where's that 1.5 million a day out of the U.S. coming from, Scott?
Most of it is in the Bakken. We've seen Harold Hamm. He's announced significant cuts. ConocoPhillips has announced significant cuts in the Bakken. Some of the majors have announced significant cuts in the Permian. And so I'd say most of that 2 million a day is by larger players. Also, you got to remember we have 900,000 barrels a day of marginal production with very high operating costs in the U.S. So I bet most of that 900,000 barrels a day was also curtailed by small independents. Pioneer 7,000 barrels a day was strictly all older vertical production with very, very high operating costs.
But do you expect your production to fall more? Because some would say, hey, Pioneer, you wanted the quotas. You got to do your part, your fair share, Scott.
No, what I'm worried about, Brian, is that I've already talked to several operators with the rise in WTI and Brent back up to 34 to 36 dollars, is that most of this production is going to come on in June and July. So I'm worried about not 3 million barrels a day, both in Canada and the U.S. coming back on. Canadian production affects us because most of it comes down to the Midwest or the Gulf Coast. So we're going to get a rise in production in the month of June and July of about 3 million barrels a day. So I'm hoping that demand picks up enough with all 50 states returning to some type of form in regard to driving, at least driving again, that we'll see hopefully a nice balance and we won't see inventories build.
If I would have told you $30 barrel oil would be considered, quote, good, you probably would have told me I'm crazy. $30 is still a money loser for a majority of the producers out there, maybe not yourself, but for others. How long will $30 oil stave off bankruptcies and consolidations, if at all?
I think it'll keep most companies from going into bankruptcy. If you remember the Texas Railroad Commission, my goal was to get WTI back up into the mid-30s fairly quickly. We have done that. That'll keep companies going into bankruptcy. And if you look at the futures curve over the next 5 years, which we all do, you see about a $2 to $3 increase. So it's pretty much in flat. Instead of being a contango, which is where it was, it's fairly flat. So it gets up to about 37 next year. We're not going to add any rigs. We're not going to add any frac fleets. And so we're really going to need $45 WTI or $50 Brent before you see increased activity. As a result of that, we are going to see a significant drop in U.S. production going into 21.
If we get demand creeping up at the pace it has been, Scott, quickly, do you think we'll get to that $45, $50 level again by this time next year?
I think the big unknown fact is whether or not we get how much of the 8 million barrels a day used for airlines, how fast do the airlines come back? I don't think they'll come back for the 8 million barrels a day till 2022 at the earliest, maybe 23, unless we get a vaccine earlier. But that's going to be the key.